Welcome to the 2013 Employee Benefits Series. My name is Gretchen Osborne, and I'm an Employee Benefits Manager at Sikich. Today we're going to talk about the ADP and the ACP tests. To refresh, an employee is considered an HCE if he or she has met either of the following tests: the 5% owner test or the compensation test. And here we have an overview of the ADP and the ACP tests. Basically, the ADP test limits the actual deferral percentage of the highly compensated employee group to ensure that their level of deferrals is not excessively above the deferrals for the non-highly compensated group. And with the ACP tests, we're limiting the contribution percentage of the highly compensated employee group, the actual contribution percentage of the highly compensated employee group, to ensure that the level of contributions for the highly compensated group is not excessively above the level of contributions for the non-highly compensated group. When we say ADP, we're talking about before tax salary and Roth deferrals, whereas when we talk about ACP, we're talking about employee after tax and employer matching contributions. So it's basically, the tests are similar, it's just the sources of money that they're measuring. It's critical, as you can see, to be able to identify highly compensated employees. It's also important to understand the definition of compensation for the ADP and the ACP tests and understand how it impacts the results. For example, does your plan include before-tax contributions in the definition of compensation for the purpose of the ADP and the ACP tests? Or, in other words, are you using gross or net compensation for testing? The reason I ask is the choice may affect the calculation of what is called the actual deferral ratio, which is the participants' amount of elective contributions divided by their compensation. So you can see in this example the effect of that. If you use net compensation in your definition of compensation for purposes of the ADP and the ACP tests, then in that case, the compensation for an individual in this example would be $67,500, taking the $75,000 minus the $7,500 in elective deferrals, and you would get net compensation of $67,500. And then when you take the $7,500 over the $67,500, you get an actual deferral ratio of 11%. Versus if you have gross compensation, in this example, the actual deferral ratio would be 10%. So it's just something that it's important to point out, that the definition of compensation could be gross compensation, but it could also be net compensation, and it does have an impact on the actual deferral ratio. And here's a sample test to illustrate the process. We're going to walk through the ADP test steps. We won't do it for the ACP test because they're actually performed in a similar manner, but we'll take you through the ADP test steps. Step 1, we determine all the employees who were eligible to make a deferral. Then, once we have that group, we determine who the HCEs are, the highly compensated employees. Then we separate all the eligible employees into two groups, a highly compensated employee group and a non-highly compensated employee group. Okay, and that's what we've done here. All the highly compensated employees are in one group at the top of the listing, and all the non-highly compensated employees are at the bottom of the listing. From there, we calculate the actual deferral ratio for each employee who's eligible to make an elective deferral. The actual deferral ratio is the participant's amount of elective contributions divided by the employee's compensation. So for illustrative purposes, our first person here has $17,000 in elective contributions, and the compensation is $250,000. So the actual deferral ratio would be 6.8. We make that calculation for every participant on the highly compensated employee list as well as the non-highly compensated employee list. And then we add up all the actual deferral ratios. So once each employee's actual deferral ratio is determined, we're going to average those actual deferral ratios to arrive at the HCE average deferral percentage. And as we've done here, you take 25.88, which is the sum of all the actual deferral ratios for the highly compensated employees, divide it by the 4 highly compensated employees to arrive at the actual deferral percentage of 6.47. And we'll do the same thing for the non-highly compensated employees. Again, we'll determine each employee's actual deferral ratio, and then we are going to go ahead and average them. We determined that the sum of all the actual deferral ratios for the non-highly compensated employees is 69.53. There's 27 non-highly compensated employees, so 69.53 divided by 27 gives us an ADP for the 27 non-highly compensated employees of 2.58. So for illustrative purposes, I've applied the ADP test here for you. The ADP of the non-highly compensated employees is 2.58. So the basic limit, which is 1.25 of the ADP of the non-highly compensated employees, in this case would be 1.25 times 2.58, because we said that was the ADP of the non-highly compensated employees, and we get 3.23. So that's the basic limit, and we're going to compare it to the alternative limit, which is the lesser of 2% of the ADP for the non-highly compensated employees, or the ADP of the non-highly compensated employees plus 2 percentage points. So if you take 2% times the non-highly compensated employee ADP, which we said was 2.58, then you get 5.16. If you take 2% plus 2.58, which is the ADP for the non-highly compensated employees, then you get 4.58. So for the alternative limit, we want the lesser of 2% of the ADP for the non-highly compensated employees, which is 5.16, or 2 percentage points plus the ADP of the non-highly compensated employees, which is 4.58. So which is the lesser in the alternative limit? That would be 4.58. So then we compare 3.23 to 4.58, and which is the greater? That would be 4.58. So as you can see, our sample ADP test agrees with our manual calculations. This plan fails the ADP ACP non-discrimination test, both the basic limitation and the alternative limitation. And so what are our options? Well, one possible way to have the plan pass is to make refunds to the HCEs, and that's what our test is recommending. The amounts to be refunded are apportioned among the highly compensated employees in the order of the dollar amounts deferred or contributed. The HCEs who deferred the largest amount, or if this were an ACP test, the HCE who received the largest match or made the largest after-tax contribution, will receive the largest refund. In our example, if you look at HCE number 1, HCE number 1 deferred the largest dollar amount. They deferred $17,000, so you can see that they're going to receive the largest refund. If you didn't want to make refunds, another option is to make an additional 401k qualified contribution that is allocated only to non-highly compensated employees. The qualified non-elective contribution results in an increase in the actual deferral percentage for the non-highly compensated employees to the point at which the plan passes the test. So in our example here, the plan could actually allocate a QNEC, a qualified non-elective contribution, of $16,320.63 to the non-highly compensated employees to correct the test. There are two design-based alternatives that would allow plan sponsors to avoid the non-discrimination tests, and that is the Safe Harbor plan and the Simple plan. So this is one way that an employer can avoid testing. And by adopting a design-based safe harbor alternative, they can also avoid the administrative costs of the ADP and the ACP tests. But they do have to factor in the required contributions. There's a faster vesting requirement, and they wouldn't be able to have a last day or hours requirement to receive an employer contribution. So this is something that we will discuss with a client that is having problems with passing the ADP and ACP tests. There are design alternatives to the tests. And that concludes our webinar for today. Please join us for our next webinar, 20 Minutes to Understanding Your Annual Additions Limit Test.